To London now, and the FTSE has rallied this morning with British banks leading the way. But doubts remain about the ability of some of Europe's banks to withstand another crisis, like Greece defaulting on its debts. Well, to discuss this and more, I'm joined by Nick Parsons, Head of Research for the National Australia Bank. Nick Parsons, welcome to Lateline Business.
Good evening, Tiggy. It's a pleasure to be here with you.
Well, we shut down the US markets for 24 hours, no bad news, and the markets seem to be up everywhere.
It was a really good time out yesterday. You know, around the world, stock markets fell between 5 and 6% last week. And by the end of that, over the weekend, there was a lot of bearish press comment, people fearful of another sell-off on Monday. And what happened instead was we took a time out. The US markets were closed. It wasn't just that there was no bad news, there was almost no news. And I think it was a good pause for the market, a moment for reflection. And today we're up somewhere between 2 and 2.5% for most of the major markets. And the Dow's called to open about 120 points higher when it does so in about 10 minutes' time.
Now, there's a new focus on bank debt and a lot of criticism about Europe's stress tests for these banks. Now, what are these tests and what's wrong with them?
Well, stress tests seem a good idea because that's what happened in the United States around the time the market bottomed in March of last year. So all the banks that received so-called TARP funds had the results of various stress tests published. Miraculously, they all, I say that sarcastically, they all passed the tests. The market bottomed. We had quantitative easing. We had further cuts in rates. And that was the start of a stock market rally, which pushed the S&P up 60%. Now, the hope in Europe is that if they repeat stress test this time around, then it might once again give a boost to confidence in markets. I don't think that particular trick will work this time. Well, a year ago, the markets really wanted to believe. They were looking for a sign. This time around, much more sceptical. The rally is behind us. Doubts about sovereign debt. And I think this is a good idea at absolutely the wrong time, but it's also a good idea very badly executed. We don't know what stress is going to be tested. We don't know if it's the same for all banks. We don't know if it will include the possibility of a default. So it seems to us to be premature to be celebrating. I think the politicians might actually regret going down this route.
I think that the stress tests have actually been dubbed in Germany as the no-stress stress tests. What's this doing to the credibility of the ECB, the European Central Bank? Well,
it's certainly not helping at all, because we've had various finance ministers. The French, Mrs. Lagardère, was out saying that she was confident that all the French banks would pass it. The Germans say they're going to pass it. The Landesbanken in Germany say they want the results to be kept private, which suggests they've got their own doubts. In the UK, there's even doubts about the legality of publishing it because of our wonderful Data Protection Act. So it seems as though it's going to be a very ad hoc series of measures. The elephant in the room, if you like, is the possibility of a Greek default, or at least a haircut of 20 or 30% on its bonds. Because if this were genuinely to be a stress test, you'd have to include the possibility of Greece defaulting or partly restructuring its debt. Now, that is the one thing that the Europeans cannot admit is even a remote possibility. Therefore, they won't talk about it. Therefore, the stress tests, in my view, have got little or no credibility. And it won't be a repeat of last time around.
Nick, can I just ask you briefly about BP, which is up today on news that it's in talks with sovereign wealth funds, Middle East funds, and possibly even Libya could be in the frame, which can't be that popular, given Lockerbie is still a very sore memory in the eyes of Americans.
Well, let's remember that over the last 10 weeks, British Petroleum shares have fallen more than 50%. So there comes a level at which they do become attractive to overseas investors. There also becomes a level which doubtless the board would be seeking to bolster its defences. Now, even if it does not come to fruition, the very fact that they are talking this type of game does suggest that they're seeking a different strategy after the pummelling that they've taken over the 10 weeks since the second week in April. And there are a lot of private investors, I think, who are now seeing this as a bit of a punt and a bit of a speculative punt, and after a 50% decline, there are a few people just trying to call a bottom in that one. We wait and see.
Nick Parsons, thanks very much for joining us.
You're welcome.